What is up, my good people? Happy Tuesday! It's your favorite loan officer in the whole wide world. It's your girl. Hashtag JLoan. That's right, I'm coming at you today. It's a very rainy day here in Texas, and I am still excited for several reasons. One, it's the last week of school here, at least in our county, and so my kids are getting ready to be on summer break, and mentally, I'm so ready for just a little break from having to do so much in my day. So, to all the parents who made it through the school year, congrats to you. Hopefully, you're getting ready for some type of summer vacation or sometime, even if it's just a mental break. So, I did want to tell you that, and today I looked into what was significant about today, and I'll make it personal. Today would have been my mom's 65th birthday. So I want everyone to stop and just say happy birthday to my mom up in heaven. We miss you, and we are so excited to have such a wonderful, wonderful angel looking over us every day. So love you much. Now, to our Mortgage Tip Tuesday, I wanted to, I get asked questions. Every borrower is different. And what's very great about what I get to do on a daily basis is I get to meet different people from all walks of life. And the biggest thing about our industry is, as much as you may think you know about the industry, most of the time you get information from online, or you hear from your neighbor or someone who really doesn't come from the industry, and you think these things, and then you come to us and we're like, no way, that's not possible. And so I wanted to talk. I picked a couple questions just from last week in itself to talk to you about questions that I get asked that maybe you too may be thinking about, and maybe I'll help answer those questions for you. Okay, so these are questions that I'm asked, and I'm just going to put them out here and answer them for you. So the number one question says, doesn't the underwriter see that we pay so much more in rent, and doesn't that matter? And the truth of the matter is that's a yes and no question. So it doesn't matter what you pay in rent as far as saying, well, now you qualify for that same amount or more, because that's not how it works. When you rent, you're doing just that, you're renting. But when someone's lending you hundreds of thousands of dollars, there are guidelines associated with the max amount that you can qualify for. So that is, don't compare the two. Just because you rent for 25 doesn't mean you'll be lent 25. On the other hand of that, there's something called payment shock and extenuating circumstances. So the number one thing that a lender will look at is, what is your payment shock? So if you go from not paying any rent to now you have $3,500 in rent, that is a big concern to the underwriter, and they may start to look at, well, how much do you have in your savings? Because if you don't have a history of making that large of a payment, the lender, of course, is going to want to know, can you afford this payment? And what happens if you lose your job? So those are things that they'll look at to help determine whether they feel secure or not approving the loan. Now, there's extenuating circumstances as well. If an underwriter is kind of unsure of whether they want to approve your loan or not, they may look at, well, let's look at their rental history. Let's see how long they've paid X amount of rent, and how has that history been. Those can help you to either qualify or not qualify. But please do not associate what you pay to what you qualify for, because they actually don't match, okay? Number two, can we just use my W-2 form from last year? Believe it or not, it's a question that in my mind, I'm like, did they really just ask me that? I get asked that multiple times, and a lender is always going to go by what you currently make now. It doesn't matter what you've made in the past. And that it's hard because you may be having a bad year, or maybe due to the pandemic, you lost some hours. So we can't use those hours from before. We have to use what you're currently making now, because now is when you're actually trying to qualify for that home loan. So it's very important that if it's in your, if it's something you can control, to make sure that you consistently work the same amount of hours, overtime, bonus, commission, things of that sort, okay? Number 3, my tax returns show my W-2 amount. So why do you need the actual W-2s? Well, believe it or not, the tax returns doesn't show us the actual employer. And we have to verify 2 years complete employment history. And some people work multiple jobs in 1 year. So when you look on your tax return under W-2, it will bulk that for you, your spouse, or you and your multiple jobs. So we have to individually make sure that all W-2s have been reported, and that if we do have a W-2, because sometimes we get a W-2 that you did not tell us you worked there, now we have to add that to your employment history. So it's very important that we receive both all the W-2s and your complete tax return. Number 4, can I roll my closing costs into the loan on a purchase? This is very huge. Now you can roll in your costs and a refinance if you have the equity to do so. But on a purchase, you cannot technically roll in your costs. You will hear lenders tell that to you, but depending on the loan type, most loans you cannot roll in any cost on a purchase. And they say that to you, but it's misleading. You're not rolling in the cost. They are actually paying for your cost via your interest rate. So be very careful as to what you hear and know the rules to that. There are some loans, for instance, USDA, if your home appraises for more than it's selling, then you do have the capability of rolling in those costs into the purchase price of the home. But again, I don't want to get too technical with that. Truth of the matter is, on a refinance, yes, you can if you have the equity to do so. But on a purchase, the only way to pay for your costs is by either using some type of grant from the lender or by increasing your interest rate. So just be careful you're not really rolling it into the loan. Number 5, can we just use my spouse's or my cosigner's credit score and not mine? So you can't use, on a loan, if there's 2 borrowers, we are going to use the lower of the 2 scores most of the time on that loan. Now, with the changes to some of the guidelines, we can do a blended score on a conventional loan. So it's not always advantageous to just keep your spouse off just because they don't work. Because if they have great credit and yours is, let's just say 580-ish, they can use sometimes a blended score that can help you to qualify on a conventional loan. So you can't just pick and choose which credit score you use. We typically will use the lower of the 2 on any other loan, but there is a conventional loan that will do a blended score. So keep that in mind. Number 6, my spouse's credit isn't good, so they won't be on the loan, but I need their income to qualify. Is this okay? No, this is not okay. So it's the income of whoever's on the loan. So if you want to use their income and you need their income, they must be on the loan, which means we must have an active credit report on file, and they too must qualify just like you. So you can't just use anyone's income to help you qualify, okay? Even if you have cosigners or it's your parents, they still have to apply and send us all of their income documentation and still qualify credit score-wise. Number 7, this is a big question in this market, and is it still a good time to buy? Now, this is such a loaded question, and I'm going to answer this as thoroughly and as quickly as I possibly can. Buying a home in this market, you have to be thinking of a long-term investment. Because if you're looking to sell next year, there is a possibility that maybe this isn't a good market for you to buy in. But if you are looking to buy a home for your family or yourself to live in for the next 3, 5, 10 years, anything beats renting. I had a client call me yesterday and tell me that her rent is going from $1,700 to $2,200, and they gave her a 30-day notice. So, and that's on a 1-bedroom, 900 square foot apartment. So for anyone to tell me, hey, it's a bad time to buy just because interest rates have risen and the market's a little inflated, I have to say, if you spent $2,000 a month on a 900 square foot apartment, you have spent $24,000 that year in something that you gain nothing out of. And over time, there's not a better appreciating asset than purchasing a home. That's one side of it. The other side of it is you have to know your own financials, your assets, your you being comfortable in affording a home in this market. Now that's a whole nother question of how do you feel with the responsibility that comes with home ownership, and can you afford the payment at the new interest rates with the new purchase prices. It is taking a lot of my borrowers. I've had one since November that just got a contract in May. This is a market where it's not an easy market. Is not a market where you can ask sellers for closing costs, and maybe sometimes people get lucky. But going into an offer, we just had one with 39 offers on one property. And just about everyone offered over asking price. Thousands, tens of thousands over asking price. This is a market that if you're not comfortable coming off some of those assets, that it's not going to hurt your family or yourself, and you want to get into providing some type of financial gain over the life of yourself and your kids, and something to pass down, and creating equity, now is as good as a time as any time it's going to be. And as I've said in every video, what goes up must come down. I can't tell you 6 months from now. I can't tell you 3 years from now. But I do know that the real estate market works in peaks and valleys. It goes up and it comes down. And one thing we do really good here at Union Home Mortgage is we truly do watch your loan. And when there is a benefit to you to refinance for lower interest rates or monthly savings, we do reach out to you. So remember, just like your first home isn't always your forever home, this loan isn't or doesn't have to be your forever loan. So don't let what people say and what's going on and what you hear on the news scare you. You need to speak with a loan officer, go over your financials, and then make that decision once you've had the information to know whether now is the good time to buy for you, or whether you should wait and increase your savings and things of that sort to make your home ownership not a stressful process, but a process that you truly enjoy. So when you get your keys, it is the best day of your life. As always, it's your girl, #JLoan. I'm wishing you a fantastic rest of your week. I want you to stay safe and be blessed. Talk to you next week. Bye-bye.